Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the market rundown heading into the end of the week, January 13th, Friday, we got the S&P 500 and the bulls are sure buying the dip in a big way the past 2 days. We had the Trump dump yesterday. The bulls bought the dip and closed at the high of the day. A lower open today in an all-out dump. And the bulls bought the dip and closed at the high of the day. Both times we defended this middle Bollinger Band support, currently 2263. And as long as that level continues to hold, as long as we keep closing above it, the bulls are in control on the daily time frame. If we lose that support, we're looking down at the end of last year low, or the low right before the new year, I should say, 2233.62, and we have the all-time high resistance 2282.10. So a big time buying of the dip. We'll see if this momentum carries over into tomorrow. On the weekly time frame, we have an inside candlestick where this week's range fits completely within the previous week's range. So we'll be watching this next week, looking for a break of this tightening range. IWM also seeing the bulls buying the dip. It was the first time we've broken the low from back at the mid-December here. That was the Fed day low of 134.26. We've been in this tight range for quite some time, and we're still in it because the bulls bought the dip up the lower Bollinger Band support and closed above that support level. So you can put your support line right here where the lowest close we've seen is 134.59, and we have not closed below that level yet, so the bulls are still holding on. The weekly time frame, normal healthy consolidation, potential bull flag pattern after the breakout, and we'll be looking to see if the bulls can continue to the upside and get a new all-time high. And the Bollinger Bands are going to need to expand a bit to create room to the upside to reach that level, 138.25. QQQ also seeing a pullback, and we also look like a bull flag here. The past 2 days, the bulls buying the dip and closing at the high of the day. So after the breakout, normal healthy consolidation, clearly it's not a dump. Closing at the highs, all-time high was 2 days ago. Highest close we've ever seen was yesterday. Today was the second highest close we've ever seen, even though we pulled back significantly. Establishing a new support of 121.60 in the weekly chart. Full breakout mode, 122.36 is the upper Bollinger Band. We're closing above that level. This is the second week in a row we've been above the upper Bollinger Band. Look at the last breakout we had above the upper Bollinger Band after I believe that was Brexit. And obviously the bulls would love to see that happen again. So still very strong on QQQ. It's still the lead market. And across the board, big, long, lower wicks. Bulls buying the dip today. We'll see if we get some follow-through tomorrow. Note, though, that we did not get follow-through after the bulls bought the dip from the Trump dump. Close at the high of the day. We had a fairly significant lower open and then another dump to the downside. So going to be watching tomorrow. We do have a couple banks. The financial sector, I've definitely been watching the correlation between the S&P 500 and the financial sector. And look at that dump on XLF. Couldn't have hit that low. I'll have to double check that. But either way, we've got BAC, JPM, and WFC with earnings tomorrow pre-market. That's going to set the tone for the day. If it's a bearish reaction, I would expect further downside, obviously. If it's a bullish reaction, we're going to be looking at all-time highs on these markets. So it's important for the market overall to be watching what the reaction to those earnings reports are in the morning. I appreciate you watching. We'll check back in over the weekend. Have a great night.